Good afternoon, everybody. And today I'm actually going to be looking at a more advanced system of trading, and that is going to be making me talk about the Tom De Mark Trendline rules. Now, uh, Tom De Mark is a renowned market technician, and he developed the Mark indicator, a set a set of tools for technical analysis, and these are what we are going to be looking at today. Now, before we go to talk about this particular DeMark's trend line, now let's look at what trend line means generally. Trend lines are lines drawn on the charts that connect two or more price points. They can help us identify what support and resistance. Now, if we can't talk about trend line without talking about trend. We have two type of trend. We have the uptrend and the downtrend. And the characteristics of the uptrend is what? Series of higher lows and series of higher highs. That is the characteristics of what? Uptrend. And how about a downtrend? A downtrend is what? A series of what? Higher highs, a higher low and what? Lower lows. So now that means if you are drawing your trend line for an uptrend, you are going to be connecting series of a higher low, and if you are doing a downtrend, you are going to be connecting series of what? A lower a lower lows. And again, apart from when we talk about trend, when a market is not in the trend, it is called what? A sideways market. It's called a sideways market, ranging market, or consolidating market. That means there is no trend at all. Now, let me show you an example of an uptrend and a downtrend. Now, in this case, we can see that from this point to this point, this is an uptrend. You can see higher highs, you can see price making a higher high, and from here we can see what? Higher lows too. So if you are drawing your traditional trend line, it's going to be from this low point connecting all of these points upward. Now, talking about before I talk about continue with that, now when we talk about how to draw your trend line traditionally, we have a lot of people telling you, okay, fine. Some people will say use the wick of a candle, some people say use the body of a candle, some people say just these 2 points is the important point. Which is the best? I'm not going to say someone is the best. Just use what works best for you. Mathematically, if you are drawing a gradient line, it has to do with where more occurrence happens. But guess what? Nobody is a highland of knowledge, and that is why we are looking at a very much easier and defined one that was given to us by Tom De Mark. Now, so this from here to here, back to what I was saying, from this point back to this point, this is an uptrend. But guess what? Right from this point, we look at it from here, it changed, and we started seeing what? Lower highs. This place is lower than this point is lower than this point is lower than this point too is lower than this point. That is how you actually look at it. A downtrend, lower highs and what? Lower lows. That is how you distinct an uptrend from a downtrend. But we have situations too where we call it a ranging market. A ranging market. Let's look at an example of a ranging market here. Excuse me. Now, if you look at what is going on from this point to this point, whenever it's not making a new high and a new low, it is mostly called a ranging market. And what do you do in a ranging market? You wait for a breakout. One of the basic major instruction whenever you are trading is always follow the trend. The trend is your friend. You can't keep going against the trend. The trend is your friend. Yes, you can't keep going against the trend. You must move with the trend, because this is a market of this market moves with volume. If we have 10 million buyers and there's 2 million sellers, it is best for you to put yourself to this buy, because that sell is not going to be as heavy or as massive as that buy at that particular point. So always follow the trend. So now let's go back to our slides. So now we're going to be talking about the importance of trend line in technical analysis. I'm going to be very fast. I don't want us to take a lot of time. It is very important to identify support and resistance. It is very important because it helps us to what? To identify support and resistance. When we talk about support and resistance in our previous classes, I talked about we have two type of we have the fixed and the dynamic. And how do you know the dynamic is with your moving average and your trend line? So you looking at how price reacts around your trend line can actually help you identify support and resistance. If price bounces off it and goes bullish, that is a support. Let's say the trend line is below price, and whenever price is coming, it's testing it and going back up, testing and going back up. That means at that particular point, your trend line was acting as a support. But if it is above price, and whenever price tests it and rejects, it is called what? A resistance. The other one, it helps us to confirm trend line trends and breakouts. Now, there's two ways you can trade the trend line. Either you know if the trend is going to continue, or you wait for a breakout. So let's say price has been testing your trend line and going back to, let's say, on a downtrend. It tests it and goes down, tests it and goes down again. Now, immediately it breaks your trend line, then you can call that a breakout. If it breaks above it and close above it, then it's a breakout. That means it is likely what? That we start seeing a bullish market. It can also help us to know potential entry and exit points. So now we're going to be talking about this man here. Tom De Mark is a renowned figure in financial industry, and this one, the trend line we're going to be discussing today, he has actually been using this strategy even before we had the charts. I always tell us that trading technically is just mathematics. Now it's probability, and you're not gambling. You are dealing with mathematics, which is more of what? A probability thing. Yes. Now he has actually been using this thing to trade even before we had the charts going on. Here was also doing a little bit of mathematics. So from now, when we go back to our charts, we are going to be doing a little bit of calculation, which is not very difficult, just subtraction, to help us get entry price for the sell, and also our take profits for the sell on particular instruments. Now let's go back straight to our charts. So now I'm going to starting on with Euro USD. I'm going to be starting up with Euro USD, and right here, our traditional trend line is going to be something like this, looking at your lowest points, and looking at it to, yeah, something like this till you get a breakout. Of course, I'm not saying this is not in. Yes, because what you always need here most times is either you are trading the bounce. What do I mean by trading the bounce? Whenever you buy, you look at, okay, fine, whenever price tests it, it rejects. You know, happened here. Wait, well, touch it here, reject, touch it here, reject. See, we got a breakout. But guess what? A lot of people say have rule it, to be subjective. When I mean subjective, according to what they want, what they desire, and a lot of people have gotten it wrong with that, and instead of being objective, they are being subjective with drawing the trend line. But this is what this man told us, in person of Tom De Mark. He said these are the important parts. The recent two lows are the most important parts. That is this point and this point. After marking this point, you can extend it. Now let's go on H4. H4 is one of the best places to actually identify your trend. Now this is the two recent low. I want us to assume that we've not gotten this breakout. Let's work with the fact that we have not gotten a breakout here. So that means we are going to be working with what? These 2 points as our recent low. This point and this point. This point and this point as our recent low. So what are we going to be doing? What are we going to be doing here? Now, what we need three key points here. We need three key areas here. The first one we need is the highest price after the secondary test. Highest price after the secondary test. And that thing we are going to be looking at here again is the interception line with the price of the highest retest. I'm going to show you that, don't worry. The third one we need is the open of the candle below the breakout candle. Now, what am I saying? Now, the first line we need is this line. This is the first test. This is the second low. Now, having tested this low, you are looking at the highest point that price went to before it started declining, and this is the highest point price got to. This is the highest price it got to before we started seeing a decline. I think this particularly got to this high. So this is the highest price. When it got to this point, we started seeing a decline. Now this is the first thing you need, this price. The second one we are looking at is the interception. Now what do I mean? You're going to draw a vertical line. Now the highest candle is this candle. You're going to draw a vertical line and look at where there's an interception with this price and the trend line. Now let's mark this interception. You click on this point, you click on here. Now this is where, oh, I'm coming. I think I have to mark this. Yeah, this is the interception line. I hope we are still in. Yes, good. So this is the interception line here. This is where the interception happened. Yes, thank you. I think this is very much perfect than what we had earlier. Now, this is where the interception is taking place at this point here, and we got an interception. This is the highest price. This is the interception, and the last but not the least, what do we need? The open candle. Now you can see that this is the breakout candle. The next candle after here, we are looking for the open, and this is the open price. On a bearish candle, the open price is above the candle, so this is the open candle. So let me make this line thicker so that we can all see it very well. Visualization, come on, let's see. Okay, so you can all see my line. So this is my open price. This is my open price. This is my interception price. This is the three key price I need at the moment. This is the price we need for us to see where we are going to be entering our sell and also be taking our profits. Now this is the interception point. This is the open price of the candle after the breakouts, and this is the highest price after the second retest. So now what am I going to be doing? I'm going to be doing easy subtraction. Now I'm going to need my calculator here. Calculator. Now what am I going to be calculating? The first calculation I'm going to be doing is my highest price minus, excuse me, my highest price minus the interception price. So my highest price in this case is 1.12000. The highest price in this scenario is 1.1208. 1.1208 minus my interception price. In this case, my interception price is 1.11228 equals. So now, after doing that subtraction, highest price minus my interception price, the result is 0.0078. Now, having get that as my point, let's name P1. You can name it whatever you want. I know a lot of people are traumatized with X, so let's use P1 in this case. We're not looking for X, we are now getting a number P1. Now, to end this calculation, we are going to be rounding up by looking at where. Okay, let's proceed by this. Now, the next thing we are going to be doing is calculating the open price minus P1. P1 is the figure we just got now. And in this case, our open price is what? 1.1162. Sorry, 1.11642 minus P1. P1 is 0.0078. 0.0001. Okay, our P1 is 0.0078 equals to. Now when I minus P1 from the open price of the candle below the breakout, I got 1.10862. 1.10862. I'm going to bring in a new line here and put in that figure. Edit this line and put in the figures. 1.10862. Okay, now you can see that price that we just got now from the final calculation, which is what, open price minus P1. P1 is what we got from the highest price minus interception price. Now it took us to where, this point. What does that mean? If you enter a sell from here, if you enter a sell from here, this point is your take profit. You can see it here. This is about 78 pips. This is your take profit. And guess what? With your risk management always at 1:3, it didn't touch your stop loss. That is the important thing here. From the sell point here down to this point, it went down straight to what? Take profit. Let's do another one with GBP USD. Let's do another analysis with GBP USD and see if we got it right. So we're looking for every point where there is a decline, and we can actually enter in for, we are back testing it now, so we're looking at where it has happened before. Okay, I made a marking here already, but I'm going to restart this marking so that we can get it if we didn't get it on the first one. And I'm going to do one again with stocks. Now, according to Tom De Mark says we don't need to do long trend line from this point up to this point. Is, according to him, he said this is so unnecessary. The most important part, because one thing is this price is dynamic. You have some cases where it changes. Look at, let me draw a trend line here. If you look at this point here, okay, fine, this look perfect, but look at again. I can tell you that, okay, if I want to do it, let's say here, you can see it. Somebody may say, okay, fine, this is what you should follow, these 2 points. But guess what? The most accurate one we have is the recent 2, according to DeMark. And if we mark here, this low here and this low here, and extend it out, this is it. Now, what are the points that we need to work with? We need to work with this man and that man. Now, where is the highest price before we start seeing a rejection? The highest price before we start seeing a rejection was here. This point. And you can see first, second, this is the highest price. The interception price, how do you get interception price? By drawing a vertical line on the highest price. This is the highest price here. You draw a vertical line. It could be any type of candle. And now the interception price is going to be around here. Highest price, interception price. The last but not the least is the open price, the candle, the open of the candle under the trend line. Now, this is it here. Now you may say, okay, fine, what about this particular candle here? Because but of course this candle went up, didn't open around here. The open of this candle is still right here. So I'm going to work with this second candle here that opened right at this point. So now what do I need? Highest point, highest price remains 1.13264, and interception price is 1.32119. Open price is 1.32081. This is the 3 figures I need. So now the first calculation is going to be high price minus the interception price. We'll go back to use our calculator. We use our calculator here. The high price remains 1.32654 minus 1.32119. Now the results for the first calculation, which is P1, is equals to 0.005. You can name it whatever you want. You can name it anything. Yes. Now the second calculation I'm going to do, the second calculation is what? open price minus P1, which is going to be what? 1.32081 minus 0.00535. What does it give us? It gives us 1.31546. So let's factor that in. Let's put that into consideration now. I'm going to put it there and put the figure to it. 1.31546. Okay, now you can see it got to the take profit again. So if you bought at this price, this is the open of the candle down here, good money for yourself. So this is telling you that, come on, you can actually take advantage of these opportunities and know the right time to enter the market and also leave the market. This is H4, so you know how much you can do this. You can come here, try it, and go to a lower time frame and maximize, and keep your risk management at 1:3. If you're my student, you must already understand what I mean by that. And if you don't understand, you can always sign up for our physical classes or our basic classes online and physical for you to have that knowledge. And again, when we talk about trend out breakout, generally, you know that you have some reversal pattern that you need to spot that says, come on, you can keep going down in the market. So like I said, last but not the least, I'm going to check one stock here. Let's check S&P 500. Let's see S&P 500. I'm going to go on H4, look at the trend I need. Good. In this case, the recent one we have happened here, and of course it's still bearish. So this is the 2 points we are looking at. This is the 2 points we're looking at. And looking at this point, these 2 particular points, the end of the low price. Please make sure that you're touching your low price, not the close, the low price. Now, what am I going to do? This is the 2 key things I need, and I need the high point before it started declining first. Now, this is the high point before the first decline. This is where I need the high point before the first decline. This is it. And interception points, to get my interception points, I'm going to draw the first on the candle that, yes, and I'm going to mark the interception. This is the interception here. Good. Interception is an English word. You can check it, you can look it up to understand. So now my open price, this is the breakout, this is the open price. Let me get it here. This is the open price. Now what do I need? This minus interception point. Now my calculator again. Where does the calculator close every time? Okay. Now this is what I'm going to do. At this point, I'm just going to say, okay, fine. The highest price here is 5663. Rounding up is 5663 minus interception price. Interception price here is 5593. Rounding up to 5594. 5594 equals to 69. This gives us 69. Now what do? I'm going to minus open price. I'm going to minus 69 from the open price. So in this case, our open price is 5578. 5578 minus the open price is what? 16. Sorry, minus P1 here 69 equals to 5509. 5509. So let's do that. Let's plot in our horizontal line to see where that is. 5509. I'm going to come here, double click on this. 5509, 5509, and okay, guys, we got it at take profit again. This is a take profit, and like I said, this is H4. So good money can be made from just understanding these basics. Thank you very much, everybody. and I hope we all understand. We tested it, we backtested it 3 times, and it gives us profits. What is that saying? So even if you didn't catch it at the open price where you enter the market, if you catch it here, come on, there's still a lot of time. So you can even do this when you spot a breakout and see if it has actually gone to the take profits. If it hasn't gotten to the take profits, then you enter it down to the take profits. Like I said, maximize your risk management at 1:3. Thank you very much, everybody. Like I said, the trend is your friend. Always maximize the trend, and please don't miss the basic class, because there's a lot of basic things that you need to help you confirm, is this thing 100%? No. Though from the back testing it seems to be 100%, but there's no 100% in anything. Do you understand? What do you need to do? Understand the basics: candlestick patterns, reversal pattern, continuous pattern. This is going to help you too. Like in this case, this is a partial Marubozu, and we saw it coming. We saw a spinning candle. This is telling you that it's confirmed, and this is what you need to understand. So try to always be a part of the class, and always enjoy all of this opportunity. If you're not part of the class already, meet your account managers, or you can reach me directly to help you understand this. Thank you very much, everybody. Enjoy the rest of your week. Bye now.